Let's talk to Russell Lynch. He is the Deputy City Editor of the Evening Standard. Russell, long time no speak. Happy New Year to you and your family.
And to you, miss.
I hope you're well. Right, I want to talk about a word, consensus. The 2018 consensus. I've read lots of spiel over Christmas. Okay, the consensus seems to be the FTSE is going to have another good year. I saw a headline, 8,000 being suggested by a number of houses. What's consensus mean to you for 2018?
Well, I think I wouldn't go too far from that 8,000 for the FTSE, but what I think we're going to see is more growth in the Eurozone. Obviously, Trump tax cuts in the States, and generally the sort of feeling amongst investors, well, actually, given bond yields are so low, there's no sign of inflation. Central banks don't seem to be in a major rush to stick rates up. Where else do we put our money? This is the thing. It's a sort of the old bull market's climbing the wall of worry. Well, it's actually what is there to worry about at the moment, and especially when you look at those Trump tax cuts. So, well, actually, that's going to be good news for corporate profitability, which should be good news for investment. And bear in mind we export to the US as well. This is why it's like more of the same. I mean, I see the UK still being held back, and it's a shame. You look at the stock market. The FTSE was up 7% last year, but you look at the annual growth of other major stock markets. I mean, like the Dow was up more than 20, I think 25%. Hang Seng 20%, Nikkei 25%. There's all of this massive flood of liquidity flowing through the markets, and the UK, for Brexit reasons, I would suggest, is hanging back. Why should you take a punt when there's a big element of risk there? Which is why I think the markets will go up this year, but I think the UK will go up as well. But the Brexit thing will just hang it back. I don't think you're going to see the stellar gains in the UK that you'll see in other markets. I'd be in the Eurozone personally.
So an underperformer again.
Yeah, up but underperforming. It's like break on really, I'd say.
Okay. In terms of UK interest rates, any movement this year?
It depends, doesn't it? I mean, the bank telegraphed one more at the end of last year, although if you see the sort of reasonable growth that we saw at the end of last year, I mean, you may start hearing from the bank about maybe two. I mean, I think the consensus is for a May and November move, but obviously if growth starts going gangbusters.
Yeah.
Bear in mind, it's all about inflation at the moment. Inflation is very high. It's due to come down at the end of next year. But the bank's been saying now for a number of months that the sort of speed limit for the economy, if you like, is now slower because of the productivity impact of Brexit. So it may well be that if inflation hangs around that much longer, the bank might decide that it actually needs a few more interest rates to keep a lid on prices.
Okay, and finally in this segment, for 2018, your consensus in terms of themes, sectors, is there anything you would stands out for you at the moment, whether that's gold, whether that's Bitcoin, whether that's technology?
Well, I still don't quite believe in the Bitcoin bubble. So I don't think you can't really put a consensus when that's going to be in 2 days' time, let alone at the end of the year. So I wouldn't try on that.
Permanent fast market.
No, exactly. Consensus-wise, I think you've got to stick with the Eurozone. I mean, so much so that the markets are talking about the ECB rolling back stimulus this year, which is going to be good news for us while we're still in the EU as well, because obviously we trade with them a lot. So that's why I think the Eurozone will be dragging up the UK, and then you've got the US as well. So I think pretty positive on stocks and growth this year.
Understood. Russ, thank you very much indeed.